Okay.
Alright, we can't see your screen again.
Oh, sorry. Can anyone see it now?
Yes, we can.
Yes, we can see it.
All right.
Okay, sorry. Okay, click on market order. Then let's see Dodge. You want to
How about we use another pair instead of Dodge?
sorry?
How about we use another pair instead of Dodge?
It's your choice. You can choose any pair. I just want to. So.
Okay, shall we?
Okay, so you'd have to choose the amount you're willing to start the trade.
Let's say $5.
Okay, go ahead.
I'm supposed to trade like open a position right now.
Yes, just put in the $5.
Okay.
Okay. That's not $5.
Actually, it is.
What?
You say that's not $5.
Is that $5? I'm busy my eye.
Maybe you should check the cost.
Oh, okay, yeah.
Yep.
Sorry. I was looking at something else.
Okay.
Okay, fine. Then click on the TP stroke SL that you're seeing before reduce only. Click on it.
Yeah.
Yeah, so your take profit and your stop loss, just the boxes, as you can see, it's written boldly, take profit, stop loss.
Yes.
So now decide according to the entry price. You now decide on what price. Like, so what's our entry price, please? 2 points. If you're using market order, that's 2.4, blah blah blah. So and we want to long, right? So that means for me, the rule I use for myself is I use very short TP positions. Sorry, stop loss positions, especially if I'm not holding and I don't want the market to eat my money too much. So I'll probably put stop loss at 2.6. So you can type 2.600 there at your stop loss.
Are we long in?
Sorry, what can I
So, is that your take profit or
stop
stop
loss
loss?
2.200, sorry, 2.2. Yeah. Then you can also put in your take profit, but I don't normally put in take profit. Or you can put take profit at 2.9 or 2.6, yeah, or whichever one.
Okay.
Then you click on buy. So that's how you set your TPS. As you can see, it's already there for you. That's how you set your TP and your SL before you even enter the market. So side the cap, done my job.
Excuse me, Chidima, can I ask a question, please?
Yes, go ahead.
Yeah, that place where Mr. Anthony typed 56. I thought he said he wanted to type $5 for the amount he's willing to use for the trade. So he put in 56.5 there. I don't understand that part, please.
Because where you have the reduce only, after the reduce you see maximum, and then you see cost. Can you see $5 there?
Yes, 5.02. I think it's
Yeah, that's.
So, can I add?
So
Sorry, can
how
I?
do you determine the 56 whatever? That you have
The,
over there?
can I chip in? Sorry.
Yeah, go ahead,
Day
Anthony.
56.
Is the number of coins you're buying at that amount, I guess.
It's just like
I think
this.
I thought it's this
This is
22 FTM.
no, not really 52. It's just like the size of USDT you are going in. This 56 you are seeing is the cost you are going in multiplied by your leverage.
Okay.
This is just like if I'm to open this position now. Let me just open it and close in a second. I hope they don't. Same the coin is even deep, you know. I would have showed you practically. Let's say, let me. So do I long it?
Long words.
I'll be sorry. Do I short it?
How many instead of green candle?
Don't
How
miss
long
it.
ago?
I want, okay.
Instead of longing,
Anthony,
short.
Let me just short and show you
Anthony,
something.
just
Instead of longing,
explain.
you short.
Let me short. Okay. You can see my screen, right?
Yes. See your body, Sam, March.
From this place, you can see FTM and USDT. I don't know if you can see that. See FTM this side. See USDT.
Yes, I can.
Yes, this just applies like to your P2P, where you can buy by fiat or by crypto. By crypto now, you put the exact amount of FTM you want to go into the trade with. While by USDT now, you put the USDT and then the amount of FTM is determined. So let's say I want to enter this trade with $2 now. I don't want to set stop all this. Let me just. Okay, I just want to enter like that without stop profit, stop loss, and the rest. I just want to show you something slightly. Let me take it where to take our order quickly. Okay, this is what the boss was talking about the other day. This order confirmation. This is what he was talking about. Where you confirm your order. This is what you want. You are entering. You are going into this trade with 2 USDT. Okay. And now, okay, I don't even need to go. I don't even need to place this trade.
I don't know. What's going on?
Ele. If you can see this here, I don't even need to go where I needed to show you that. If you check the price here, you see 2 point. Okay, that's the price I'm buying at actually. If you check the cost, the cost down here is 2.05 USDT, and then the amount of USDT I'm entering this trade with is 23.9. So the cost now, or the amount of USDT I'm entering this trade with, is the cost multiplied by my leverage. That is the amount of USDT I'm in the trade with now. I will enter the trade with rather. I don't know if you understand.
Yes, I do.
Yeah. Since my leverage is 11 multiplied by my 2, I get the amount of USDT I'm entering the trade with.
Okay.
Yes.
I get you. Thank you very much.
6,500. Maybe 6,000. I beg confirm from you like 6,000, sure. It's 6K.
Okay, sir. I think that's about TP and SL before entering the market.
Yeah.
Okay, hope we all understood. Though. Is there anybody who is still not very clear with that? So that we all clear it now. This is a very vital lesson we all need to learn, because in a case like this shift now, as you can see the price just run through, and if you are not using the stop loss prior to your entry, you get bonds. So that's why I demanded that someone guides us on that. For those who are not very conversant with it, I myself, I use my own method which works faster for me, but I won't introduce it because it's very risky. So hope everybody is fine with this. method.
Yes, let me ask you a question, sir. Now, apart from
No.
Yes, I think the stop loss was at 2.2 and
Okay.
the take profit
Now
was
okay. Let's work with stop loss. Let's say you entered this trade at 2.6. You entered a short position at 2.6, and then your stop loss is at 2.2. Now, there is a way you can adjust your entry to even be very close to the 2.2, which is meant to be your stop loss, rather than using stop. It's very risky. It's an advanced technique that I'm not supposed to share with you guys now. Now, this is how it works. It will only work if you have at least enough balance in your futures wallet. So you can't be doing it when you're trading with $50 and you place your first trade with $10 and you're already losing 10 and all that. You can't do all that. You end up getting bumped. So how it works is if you enter the short position at 2.6 and the price keeps moving up, you're seeing 2.7, you're already at loss. Probably you entered with $10 and you're seeing that it's still moving up. You're still heading towards 2.7, almost getting to 2.8. How you can adjust your price, your entry price, is at around a certain point, probably around 2.7 something. You have to use technicals for this. It does not work if you don't know technicals. You have to determine the next resistance level if you're going short, or support level if you're going long. So what you're going to do is that if the market keeps moving against you and you already have your support or resistance level, the one in your favor, when you get to that point, you are going to, as in you hedge your position. Now, You entered at 2.6, $10. Let's say 10x. And then you are moving towards the price is still pushing 2.76, 2.77, 2.78. And you want to kind of correct your entry price. What you do is you open another position with double the amount of your loss in P&L. If at that time when the price is moving towards 2.7, 2.8, 2. You're seeing it moving, and your initial entry was $10, and you're beginning to see -$9. Now, if you with double of whatever loss you've made, you have accumulated in your P&L. So what am I saying here now? You step in with maybe around $20 on top of the initial entry, which is 10. So now the total risk you're taking is a risk of almost $40 because you have 10 your initial entry, you have almost 10 as your minus in P&L. That's making it you're losing almost $20 already. Now you open another position at that resistance level with the hope that you have a bounce, maybe a sharp reversal, even if not so much. What does this do? When you open another position with ×2 of your loss, if the market should move in your direction, just a little, not so much, a very little move in your direction, you'll be having your P&L, which was at let's say -10, coming straight to you'll be almost seeing it at maybe +2, +1, just within a short period of time, just a very short move. Why? Because you doubled your position. The position you're losing, you more or less doubled it. So this is going to now be the total position in the market is a total of $30. That's why I said you can't do this if you're not using much to trade. Not you just get liquidated. And you can't do this on isolated margin. So when this thing is now reading plus, under just maybe a few minutes, hopefully if you have a bounce, you will now close. Now your total margin in the market, your total entry is now about $30. Now you will now close like maybe 75% of the entire position. By doing that, remember, you're no longer lost. Your P&L is no longer red. Your P&L is more or less that's down green. So by doing that, you've
Let me check something.
You're using isolated. That's why you're talking about increasing margin, right?
Yes.
Yes. If it was a cross, if you adjust your leverage, is inversely proportional to your margin. If you are trading with $10 at 20x, and then all of a sudden you decide to you want to make the money sharp, you want to move it to 50x. That $10 will instantly become like $3 or $4. As in your trading with your margin becomes $3 or $4.
Okay.
I don't understand that. If you enter a trade with $10, that's 10x. Yes, 10x. Okay. $10. And then along the line, you decide to adjust it to maybe 20x. Like you want to do sharp guy. Yes, sir. What will happen is that $10 you initially entered with will turn to like maybe about $3 or so. So indirectly, you're still on the same trade.
Okay.
Just the same way. Let me make it very explanatory to you now. Trading leverage is like, some people see it in that you can see it in two different ways. You can either see it as you are being borrowed money to trade, or you're trading with whatever you have, but your yield will be multiplied. You understand? These are the two ways to see this leverage trading. Clearly. Is either like leverage trading is either you see it as you're being borrowed money, like someone is loaning you money to trade. Let me explain it this way now.
margin trading.
Yes, margin trading
Futures
is similar, but it's not the same at all. It's a totally different thing entirely, but they look alike. Just that one there is stated is not the one you can adjust your leverage to what you want. Yeah, there is a fixed 10x. I think it's 5x, it's a 3x or something. I don't really do that, so.
I don't know anything about that. But something about this isolated also is when you are making profit, it's showing you the PNL. It will be accumulating up also. It will be reflecting also in your wallet balance. That's future wallet, and even in your overall wallet balance. Even
I don't understand.
What I mean is that, okay, right now, I have an open position. I don't know if I'm getting it right. In Atom USDT, making some profit. Now the PNL I'm seeing here now, unrealized PN, is already reflecting in my wallet. That's
No, it doesn't reflect.
my balance in the futures wallet.
What you're seeing there is your, I don't know if we have any accounting students here. When you've done all the whatever, you're closing your book, like let's say you end everything instantly. Whatever you're seeing in that USDT session is exactly what you are worth in futures at that moment.
Yes.
If your PNL is in red, they've done all the math. So everything, if you just close all your position, that's all you get.
That's what I'm saying. So I'm making profit like this, even though I've not closed the position. It's already adding up. It's reflecting yes.
Just like I told you now, in cross, when your PNL is green, you see it adding. It will be surmounting. When it's red, you see it, reducing. So everything has been calculated for you. If you want to close everything goes at once. What question do we have? Does anyone have anything to ask?
Somebody asked the question. They said, how about when you just increase your margin in an isolated futures trade?
Was explaining all this isolated and cross and all of that.
God permits, because this will be our last class here.
Okay. So I think boss was trying to explain some reason of margin. When you are about to enter a trade, it's just as if you are signing a contract. Do you understand?
Yep.
And the way it is on isolated margin, once you place a trade, you enter a leverage, you are signing a contract, and the way Binance looks at it is that once you click on confirm, you have agreed and there is no going back. Do you understand? So if you are saying want to enter a trade with $100 and I'm using 10x leverage, that means on my $100, whatever I'm trading, if I'm losing or I'm gaining, I'm having the multiple of what 10 times effect on that $100. That is a contract. Once you click confirm, you've clicked confirm. So when you are already in the trade, if you are adjusting your leverage now, it's just as if you are coming to tell Binance that okay, I'm changing mouth. I wanted 10x 10 times multiplication effect on this $100, but now I want it to be 20 times multiplication effect when you've already signed a contract. So now you're trying to tell them that you're going back on the contract you've signed. Now, according to Binance, it's a contract you've signed, so they are not going back. So what will happen at that moment is that, okay, since you are being wise, you want to say, okay, since you see that $100, the trade is going in your favor, and then you just want to increase it to like 20x. What Binance will do is that once you make a decision that okay, I'm increasing the multiplication effect on $100 from times 10 to times 20. Okay, they'll be like, okay, good. Since you are doubling it, what we'll do is that
We will now have the other one.
that $100 you have now, they'll just slash it into two, so that you have the 20x multiplication, but it's no more on $100.
Mad,
It's
oh.
on $50. Double this. So it's just like you are trying to play them the kind of you are trying to use wayo for them. And them mad, they know what they are doing. I don't know if you guys understand it.
Yeah.
So they'll just slash that $100 divided by two. Yes, you have your 20x multiplication effect on $50 now. No more $100. So it's almost the same thing. So even if you take it to times 40, they will slash that $100 divided by 4 in respect to your initial multiplication effect is x. So what you have in the trade will be $25, but with 40x multiplication. I don't know if you guys understand. That's
Okay.
just how it works.
Sorry.
It's more like you're signing and there's no going back.
Okay, that is.
Okay.
Can you see my screen, please?
Yeah, I can see your screen.
Okay, I suppose what you are explaining is for leverage, right? Like I want to increase a leverage.
Yes.
What I'm saying now, I don't know if you can see my margin USDT. Like this 2.7 now, I want to increase it to $5. Maybe I'll add another 2.3 to make it $5.
Okay.
Yes. So I want to increase my margin and leave my leverage untouched. Like I want to add more funds I entered with $2. Now I don't want to open another push. I just want to add to this $2. I want to add like 2.3 now to make it 5 in the market now. And I'm still leaving my leverage at 20x that I use.
Okay. Yes, you can do that. But what happens is that the entry price now will now be the average of the former entry price and the entry price you want to take for the addition right now. Thereby, your liquidation price will be recalculated in respect to the average of the entry price of the former and the now.
Oh, even if I don't.
Do you understand that?
Yes.
So that's
even if I don't open a new position, right? If I just click this plus now, and just put the amount and confirm.
Even if you don't. Yes, actually.
Oh, okay. Copy that. Thank you.
So that's just it. Okay, I have a question. Like this, your margin now 2.7.
Yes.
Okay, all right.
Continue, please, before you come to this question, please.
I said, I'm just giving an example. I said your margin now is $2.77.
Yes.
And it's on 20x. So let's say you increase it now to 4x. And they'll just slash this $2.77 divided by 2. Now, the one they are slashing into 2, the balance, you see it in your futures balance. It will just automatically go there. What will be in the margin will be about 1.3 something.
Okay.
That's just how it works.
All right. Thank you. Someone has a question now.
Someone Okay, to be given to you, actually, to be back to your futures wallet balance.
All right, thank you. Let me confirm if I understood what you said, Mr. Daniel. All right. So, at the screenshot now, we are all seeing the margin is 277. All right. So, if I decide to increase this margin, all right, to $4 now, that means I add up $1.23. Right. Now, what the effect will be, number one, the entry price, which is currently 6.56, change depending on why did you change something? Good.
Sorry, boss.
Depending on the second entry price. So the new entry price will not be the first entry price plus the second entry price divided by 2, right?
Something like that.
Yes, exactly.
Then the liquidation price to
Then
be
you
adjusted.
Yes.
Okay.
And the size USD change. Okay. So to save stress, instead of opening a new position, you can just add the margin, add something to the margin, and everything will. So, and if you still want to maintain the same leverage, right? Did you get Mr. Daniel?
Yes, you're correct.
All right.
I have a question.
Right, but
Yes.
Hello?
Please ask.
Um,
fib retracement because the momentum of the pump, the upward move, already signifies that when it's going to drop, it will drop faster. So Fibonacci, the distance between where you're plotting from and the first level of Fibonacci is exactly about 3.6% gap on chart. So let's say you cut the top and you're shorting from the top and you decide to take profit at the first level of retracement, which is the fib retracement. You are going to be taking your profit at about 3.6% gain. So that's the distance between the top of wherever you're measuring from to the first level of fib. But if I'm trading a less volatile coin, probably you're trading the likes of maybe Texas, Cardano, those ones that pump only once in a while, and you're looking for a pullback. There are many ways to get your pullback, which are a little tedious. If you look at what Mr. John did earlier today, there's an analysis he dropped. I was so impressed. That's what I asked you guys to be doing, and you can see how much or how many trades he has entered today. And I'm sure most, at least if not all, most have been successful. If you don't practice what you're learning, you're wasting your time here. Don't be scared. If you're scared, leave here and go to sports. Sports is for those who are scared and lazy. Futures is for the agile ones whose brains are still very much intact. So if you are lazy and you don't want to work, go to sports so that you can buy your coin and leave it and come back January and take your profit. You have to practice. You have to lose money. When you lose, when it pains you that you lost, tomorrow when you're doing it again, you remember you made a mistake yesterday and you try as much as possible to avoid repeating the same mistake. So just like I said to somebody this morning, losses are a very vital part of trading futures. When you've learned how to lose minimally, you will now know how to maximize your profit. When I'm correcting my price, just like I told you guys, I usually correct my price with a loss. Do you know why? I corrected a price on SHIB. I'm on SHIB right now. I'm in profit, but I was at loss, and I corrected the price, my entry price, at loss of about maybe a few dollars. So as I'm in profit now, I've recovered that loss. So it's now left for me to know, is this market good to, carry on, or should I exit so that I will replace that loss and wait for a better entry? So it's a very vital, losing is a very vital part of futures. Anybody thinking that you can trade futures without loss, you're just dreaming in the fantasy land. Third, actually, if I show you, most of these things I'm showing you are things that I'm not supposed to show you now, because you start practicing it and some of them can fail. Just like you already know, the market is not, you are not the only one trading it. So you can't be the one to determine where there will be a reversal. You can only do what your technicals have told you. Sometimes they work, sometimes they fail. But if you do it well, you will have at least 70 to 80% success overall. Miss Nana? She's not with us. I'm going to share my screen now so that I can just throw a little more light on the issue on ground.
Okay, sir.
So
Yeah, Hajja. Good evening, ma'am. Okay. Okay, I'll check.
Now, hope you guys can see my screen. Indicate, please.
Yes, sir. Yes, sir. Yes, we can see.
Okay. Now,
Okay.
if you're trading,
In a few minutes, I'm inside.
let's use a live page. This is
Yes, I beg.
Shiba. What you're seeing on my screen now is a fib. Is a fib retracement I used initially. If you look very well, you can see that I had a little, like, when I was shorting, I entered somewhere here and left the market somewhere here, just around the first line of fib 236, and then I left them. I didn't leave. I didn't close everything, just like I always say. I just closed 75, but before I knew it, it continued going down. I closed another 75. So what was left in the market was barely up to $2 or $3. So I left it. I was just watching. This new candle sprung up and, converted my small change to minus. I was even very happy. I was very, very happy. But I couldn't have known that this retracement or this pullback was going to happen here. I couldn't have known. There's no way I would have known. But the only thing I can know with this information, just like I always hammer, if there is no pre-existing data, there cannot analysis. Now that I have this point, I'll mark it for those who can't really spot what I'm saying. Now that I have this point, I have a point here, and I have this point. I already drew this before I even started sharing my screen. I'm waiting that when I catch this thing somewhere here or wherever on this same trend, I'm still going to short it. I wouldn't have known. If I had pre-existing data on this, I would have, opened another short position from here. If I had pre-existing data, I would have opened another short position from here. It doesn't mean that Shiba was listed this evening, no. It doesn't mean that there are no pre-existing data. All it means is that with the method of analysis I needed to do, I didn't have enough data to suggest to me which direction to go. It doesn't mean that I cannot connect this trend line with one of the old resisting ones. But which one are you going to connect it with? Which one falls on a trend? The market was totally flat before this pump. Let me show you. The market was totally flat. There was no trend. It was just trading sideways. If you look very well, there is no way I would have connected this trend from any of the pre-existing candles to know that I will have a reversal here. But now that I have two candles, at least I have something to work with.
I have a question.
Okay, quickly.
Is this an auto fib or you drew the fib itself?
How do you mean auto fib?
Okay, there's the automatic Fibonacci. You just click on it. You don't draw it yourself. I think trading view just helps you to draw it. So I just wanted to know if that's.
No, I don't. In this kind of trading we do, if you use auto, you end up into, you find yourself inside a dustbin. So anything I'm using is like I do it myself. I just pick the fib and then I plot. Nothing more. I just plot it myself.
I have a question.
Alright, go ahead.
So why are you using a 15 minutes time frame?
I used a 15 minutes time frame when I showed you guys the TD sequential to tell you that we are going down, and you can see since then the market has been coming down. And I stated it that this is the 15 minutes already suggesting that the market is getting exhausted. And as you can see, it's already exhausted. That's why I said it will gather momentum while trading sideways, to gather some momentum and then spring up. But knowing that it's already exhausted, if we don't see these red numbers counting up to like 7, 8, it means it has not gathered enough momentum. But it might spring up and then I'll short it. So that's the usefulness of this line, so that I will know where to find another entry. So I will wait for it, it will spring. I'll take profit for the long and short it. I don't really trade Shiba and Doge. You can see what Doge did yesterday, because these meme coins are usually unpredictable. A whole lot of factors can, alter the price action. Elon Musk can come out tomorrow morning and say one rubbish, and then it will drop to nothing. So I don't really like to trade those kind of coins. So I'm just scalping. So that's why there's 15 minutes on my chart. And then now, looking at the previous data, just not too long ago, on this side, you had, even though it was a ranging market, you had 1 to 8. And then you had 2. Now you had 1 to 9. Since then, we've been counting. These are additional candles after exhaustion. Remember, I'm talking of small time frame. This is just 15 minutes. Ordinarily, TD sequential is best used on a 1 hour time frame. But you can use a lower time frame just to see if you are approaching an exhausted region. But it doesn't mean I'm going to base my trade on this 15 minutes. But at least it did the work I brought it for. I knew that we were exhausted already. So it only remains for the 1 hour to correlate with the 15 minutes before you see a dump. The 1 hour is still reading far away. We are still like on a 6th candle. So you can see I'm still keeping track. We're on a 6th candle. So the moment this thing continues to trade sideways and I see 8 or 9, I might go and borrow money from my neighbor and points. So for now, it's getting exhausted because momentum is dropping, but I can't really pour money and bet that it's going down, but I know it's going to go down soon. So this line I have here is also helping me to monitor the trend. A break above this line will flip this region wherever to support, and it will continue to go up. Questions?
Hello, sir.
Yes, I will.
I have a question, especially in this shorting the market, because we understand that longing is when there's a breakout. Then this shorting, I have a problem with it. Because how do you know, okay, the market is exhausted? Is it because of the use of this TD sequential that you're talking about, or is there other tools that tells you, although there are other tools, yes, like the MACD that tells you that, or the RSI?
They are all grouped under what we call the MRIs. In full, the momentum reversal indicators. There are a whole lot of them. Just like I said, you can't know all the tools on TradingView. There are too many. RSI, stochastic RSI is still part of them. MACD, CD sequential, even the Bollinger Band, sometimes signal. Yes, it's partially part of the MRIs because you can know when the momentum of the market is dropping using the Bollinger Band. The bands can signal when momentum is dropping. Like when you see the upper Bollinger open up, it means it's giving way for a large momentum of price action to hit upward. And then the moment you see it curving down, as it's forming a resistance, as it's curving, at the same way, it's signaling that the momentum is dropping. That's why most times when you see it curving downwards, once the candle hits it, it drops. It will start printing red almost instantly. More questions? Well done, sir.
That's it. No clear.
You're still not clear. That's what I said is these are the technicalities. You've done Fibonacci, you've done some other one. There are so many that you've not done. So when we get there, we'll start breaking them into pieces. The Bollinger Band will be treated probably a whole week because there's so many things people don't know about Bollinger Band. They just know that it's this, is that, but the use is different from what you may think. The stochastic RSI may look like the MACD, but they are totally two different things on their own. So there are ways to know when the momentum of the market is dropping. Then secondly, if you plot your lines very well. Okay, now let me which coin is still caught under resistance? Hold on. I'll show you something. Okay. Seeing some old lines in the code. So what I wanted to show you is, even though you are not using the momentum reversal indicators, your trend lines can do the job for you, as you already know. In fact, they are most trusted for shorting. The trend lines, they are most trusted for shorting because it's usually very difficult for a price to just get to a trend line and just beat it and pass without testing, maybe coming back, test again. If, for instance, you're trading this Coty between here and before this breakout, it has broken out. Got the signal last night. Even though the breakouts might still come to test this trend line. When you're trading this Coty and you have this price dropping here, you have this low. This is another low. So basically, you know that you have lower highs, lower lows. This is another low, 3 lows. For every low, this came here, had a low, made another low. Anytime it makes a low, it comes to test. This already gives you a signal for shorting, because anytime you test this line, it drops. This is a signal. Secondly, inside this same line, you have another place where you can short. This is another trend which is valid. So if it gets to this line and you short it, you're not doing wrong, because for most times it touched this line, there will be an action. Like, it doesn't just, there's no candle that broke through this line upward. There's always an action. Even this green that passed, you can see that at the middle it broke before a new candle continued upward. So for every candle coming from the lower side, it gets at least resisted by this line. Likewise, this line. So if you're looking out for short-term opportunities, it works best with pre-existing data. If you have your trend lines from old trend lines, they work best for short-term. Who can remember the day we were pumping? What was pumping that day? Was it Keep? Was it Keep or the YDX that we used a very old trend line to know where to start shorting? Who can remember? Nobody, and all of them have pack money, put for pockets.
I didn't participate in the trade though. I don't know the trade.
Okay, yeah, you guys were not here then. So the others that ate all that money, you all have eaten and cleaned your mouth, have you?
Was it not SFP or
Yes, okay, I think either SFP or Keep. One of them,
yeah.
either SFP or Keep. I know that we cut it and it really gave profit shorting. In fact, it's still shorting up to today. It has not even woken up since then. So old trend lines work best for shorting. That's why if you look here, this line, if I extend it backwards, if I extend this line to my left backwards, you see that it cuts across a major support or a resistance somewhere. It usually cuts across a major support. It works best. Let me extend it. Just like I just said now, can you see that this line already was something happened with this line sometime in the past? Can you see the region where the line falls? This is a heavy region of activity. Can you see?
Yes,
see
I
a whole
can
lot of pick up and drops and all that before it broke downwards. So the best way, if you're looking for shorting opportunity, if you have old trend, why I said use trading view is so that you can always retain your data ahead of time. If I open some old coins that probably are not doing well or that have not been doing well for a while, you see old trend lines, some of them from last year. Probably when we traded them last year, we drew lines and all, and then maybe they started messing up. We dumped it and moved on. You go there now, you see the lines are still there, and they are mostly the strongest for shorting. Those old trend lines, once they hit there, they usually reverse instantly. So any other question?
I don't know if there is a way we can just revise one of the technicals that have been treated in this class. Maybe Chimoko or Magdi.
Unless somebody wants to teach us now. Is there anybody that wants to take us on anything?
I have a question, sir. I have so much missed out on this class. I didn't know that there will be a class this night.
Okay, like you want a recap of this class?
Sir?
Like I don't know. Like you want someone to take you through the class now, like what we have done before you came. Choke.
I want, please, what the class was all about. What are the features of the class? Because I didn't even have any idea about what's going on here.
Oh, okay.
You might have to watch the video because this is the last class we are having and we can't spend a minute going backwards. Seriously, after this class, this group will no longer exist until the next session.
Okay.
So I think we should better use our time wisely before we all get exhausted. Think about 1 hour 30 minutes is gone.
1 hour 28 minutes.
Instead of going going backwards, you should try and forge ahead so that the ones you missed, if you can get the video later, you just go and watch it. That's my suggestion. I don't know if any other person has a contrary suggestion.
I think that
No,
was
that's
perfect.
good, Mr. Since this class is recorded, right?
Yes, it is.
Okay,
I believe so.
I hope
Instead
so
of
too.
going to revise all these things, I think it's better you just look for the video later and then catch up with them. So can we move ahead?
Yes, so I asked the question, I don't know who is planning to, because
You said what?
I said I made a suggestion and I don't know who is volunteering to.
No, it won't even be in this class. We can't revise all those things we've taught. What we've taught, we've covered the whole. For you to be drawing your trend lines and trading with it, that means we've really gone far. I don't think if we use this time to go backwards, it will be wise at all. I think we should proceed to the ones we've not covered rather than the ones we've covered.
Okay, sir.
Sorry, sir, please, I have a question. Hello, can anybody hear me?
Yes, we can hear you.
Yeah. My question is, can't we use fees to go when there is any persisting data to know where the momentum is no more in market, to know where the exact is to show the market, the fib.
The fib is not a momentum indicator. The fib is a reversal, just a price reversal indicator, just to know where the reversal is hopefully going to stop. If the price is dropping or climbing, fib works best to know, okay, it's dropping. It's supposed to stop at this layer. It's supposed to bounce off at this layer. You get? It's supposed to, as it's dropping, it's not supposed to go, not a must though. There is no assurance, just like I keep telling you, not because you know how to use fib means once you plot it, you expect that once it gets there, it will just obey you. No. Even when you plot your fib, there is still room for errors. In fact, your fib is not the only. If you're trading, if you want to enter a market, for instance, you're waiting for it to retrace. Your fib should not be the only reason why you're taking that trade, because it bounced off fib line. Like if you can see my screen now, I just plotted my fib. And just like I said in the other class, one of the ways to know if you did well, if your fib is doing well, is look closely at the candles. If you notice that most of the candles are, stopping on the lines, gliding on the lines, bouncing off, it means you did a good job. Now, this price now is dropping. And decide to just ladder in from somewhere around this fib and go long, since it might bounce off. Why I'm so sure is that if you look here, you see this candle ending exactly at the mouth of the fib. If you look here, you see this one cut off, even though it dropped a little around the fib line. If you look here, you see that these ones are just bouncing off fib. If you look around this area, the gap from here and here is not much from the fib line. It means this fib most likely is valid. You can see a bounce off, bounce off, bounce off, bounce off. You can see what happened here just on the fib line. You can see a complete bounce off. So that's one of the ways to know if you did a good job with your fib. But it won't tell you the momentum of the market. Now, can you see what happened here? I was still saying I was going to take a trade. It's already happened because I did my fib well. Can you see? Can everybody see the screen?
Yes, I can.
It does not mean that this will not break. It simply means that the fib is well plotted. At least you can see a bounce off. It gives you room. For instance, if you enter this trade, it gives you room to set your stop loss. If you didn't put it initially, it gives you room to set it again. You can see can you see how fast it's moving back up? Put it on the 15 minutes chart so that you see it moving quickly. Does not mean that it cannot come back to come and cut it down. That's work of a retracement tool. So a wise trader will just come and put just something around here. And remember, as I said, because you plotted the line does not mean your accuracy will be even close to 90%. Always give room. If you want to enter at this fib line, don't enter on the red line. No. Shift it up a little. Give room for errors. Always give room for errors. Always. Now, Miss Nana, just like what we were saying, this is 15 minutes chart. For a scalper, you have this trend. You have something trending downwards like this, and you are shorting. If you already took profit, maybe from here, you can still start laddering in from around this line, because when it gets here, it's not been able to break this trend. So when it gets here, you see that it may not go once, even though it will break it or it may not. But you will see that it will bounce off a little. It might bounce off, play around, come here before it will now cross over. If you look here, we're already having a triangle. This is 15 minutes, but this is when you're scalping. Can you see the screen?
Yes, I can see it.
So now indirectly on this small time frame, you have a triangle. And you see now it will be playing around there, and maybe when it gets somewhere, it cannot escape. Does not mean that it cannot just go up and escape. Anything is possible in the market. But what you should be looking at is the most probable outcome. So if I had taken this trade, if not that we're in a class, I'm sure I might have taken this trade. It should be about how many percent now? Okay, that's 1.6%. If I'm doing 50x, I've had about maybe 65 and 85%, okay? Or even more. 80%. So if I had $20 in the markets, that's a sharp maybe extra $15 or something. Okay. How are you? We can't hear you again. No.
There is microphone
behind the pillow.
Okay, no, I'm not hiding behind the pillow. Okay, sir. Yesterday I think Mr. Share Coffee, Mr. Philip. He posted something that anytime he puts large amount of money in the market, that he gets wrecked. Like 15, I think more than $15. Like he normally notices that he will just, the trade goes bad. So I was like, okay, in my own mind, I was like, okay, my own question is now, how much, you've been trading futures for a long time, sir, so how much is advisable to start off with?
$1.
$1.
No, sir, I'm sorry. I want to answer her question. I think it's advisable to use 1 to 3% of your capital in your future accounts. 1 to 3%. So like if you have $100 in your future account, you can use $1 to $3 as 1 to 3%. If you have $200, you can use $2 to $6. That's just my suggestion, so that you have the rest 97% or 98% to back up your
Can you guys see how the fib works now? Can you see how perfectly you can use fib to just make quick cash? It's almost reading 3%, just as it bounced off.
Why don't we long it then?
Yes, you can. It depends on if you know what you're doing. Yes, trading is all about knowing what you're doing. You shouldn't be trading yourself if you don't know what you're doing. I wouldn't say long it because this market is looking exhausted. This is 15 minutes. Let's come to reality. This is 4 hours. Can you see? This is 4 hours. It has bounced off this fib. But what do we expect next? There is a selling pressure already. Now refer to, most times when you're trading, always go back to old data. Now go and look for a candle of this height or something close to this height with this amount of selling pressure and see what comes next. Secondly, what is the time? 8:20. You have 40 minutes, right?
Yes.
About 40 minutes to the top of the hour when this candle will close. This candle will close by 9. You have 40 minutes. Do you think this will appreciate and cover all these things within 40 minutes? That's another thing to consider. Now, pre-existing data. Look at the candle that looks like it has that length. With its selling pressure, it ended up almost halfway. The next one was until red started printing. So always refer to pre-existing data. Find what looks like what and know how it played out. It will also help you. Use time. Know your time when you're entering the market. Usually the 4-hour candles, like the close of the 4-hour candles, usually come with volatility. I mean 1 a.m., 5 a.m., 9 a.m., 1 p.m., 5 p.m., 9 p.m. They usually come with high volatility. The close of half-day candle, the 12 hours candle, come with higher volatility. That is 1 a.m., 1 p.m. Likewise, the close of the daily candle, 1 a.m. That's why most times when you wake up, you see that some of your coins that you left open, you've either been liquidated or you see profit. Because there is usually volatility after the close and open of a new day. So that volatility usually can go any side depending on what you're trading. So these are the few things you should also always observe. Our market is really bad. This is just what's happening to dominance. Let's see why this whole thing is happening. That is really bad this week. Can someone ask another question while I open?
Excuse sir.
Okay.
So how do you know when the first candle of the day will open? Like what time does the first candle of the day open?
It opens at 12 UTC GMT. But remember, Nigeria is what?
GMT plus 1.
So add 1 hour to the universal time. Okay. That makes it 1 a.m. 1 p.m. For the midday, like half candle, the midday candle, 1 p.m. for the close of the day. Wow. Dominance is dropping rapidly, but odds are dull. Why?
That's what I noticed too. I'm just looking at it from my end.
Second chance to log in.
What's that?
Means okay, no, really. Okay, no, not really. It's not. We're having a hammer forming on today's candle, and you have how many hours to go? 5 hours. So that's why you're having a hammer, as the hammer is suggesting a bullish direction for the next candle. So this can affect the odds. Just this hammer that's forming. When you have a bearish candle here, like you had this bearish engulfing, I know that this day was a very bullish day for odds. So now that we're having a hammer forming, it's not really good for the odds, because if this hammer forms now, tomorrow now might be a green candle. The odds will bleed. Any pullback from BTC, everybody will just disappear.
Wow.
But so can you quickly analyze Atom, Tether, and XTZ?
The YDX2, please.
Is somebody still holding the YDX?
Yes, I'm holding it.
This means time will.
Yes. I
Oh,
know
yeah,
that.
yeah, I like holding all this kind of coin, like EXS, all this kind of. Apex Love, it's been a while. She's been so quiet in the class. Is she grabbing out for?
No, I don't trade futures. I'm a full spot person.
It's good though. You are the safe one. Apex Love, is she in this class? I've not seen her for a while.
Yeah, I'm here. People forgot me now.
Yeah.
That's why I was like, I saw you and you hardly ask questions. I just assumed you are the guru of the class.
Guru care.
No, we should do that.
I told you the other time I was having a little challenge, so I was I didn't want to draw you guys back, so I'm
Okay,
fine.
what kind of challenge? We carry everybody along. So
it's a personal stuff.
Okay, personal.
Yeah, I told yeah.
Okay.
So,
but how are you dealing with it? Are you back on track with us?
I'm still let me just say for now, I'm not really trading. I'm still stuck. So I'm just watching the markets, observing things. So
and see how Chainlink has picked up finally, as I told you it would.
Fine Chainlink. After keeping me for over a month.
Chainlink is for hodlers. There are some kind of coins that basically for hodlers. Chainlink, Cardano, Ripple, Tron.
Tron.
That for hodlers, the day Tron will explode, then someone will tell you that he bought Tron at 0.000. You understand? These are like investors who just come in, they invest in the project and walk away, and then whenever they hear news, they come back and check how much they've made. So Chainlink is like that. It's most of these big projects. That's how they are. There are too many eyes, and the large holders are not trading. They don't trade. The coins that have more retailers, like retail traders, are the ones that you see this volatility moving up and down. Those ones that have large holders, when it moves, it slowly moves. As it's moving, it's building support, so that when the market is shaky, it has somewhere to fall to. That's why, no matter how bad the market is, I don't think we've seen Chainlink go below, is it 25 or be 23? Even with all these
25. 25.
So that means it's been holding a strong support for a very long time.
Yeah.
Those are the best kind of coins for hodlers, not the AXS or the DYDX that will shoot and do 100% and drop by 300%. Hodlers, you hold those coins that build support on its way up. Cardano can, although I'm not saying can, Cardano has not gone beyond 2. After it managed to climb above 2 and I think close to 3 or something, I'll be above 3. It has not, that means it has built a very stable support. No matter how bad the market is going, you see it, even if it drops to 1.9, it will quickly come back up. Those are the projects for hodlers. You don't have much to worry about. Eventually, it will still climb up.
So definitely hodlers can also hold those coins in futures.
Yes, but if you cannot, Shebina, the one way they go down and go, the next morning I will hear somebody is not moving, no. This atom is not moving, no. This Texas is not moving, no. Is that how they hold coin? Holding coin means you just forget about it. Make sure you provided everything the coin needs. Give it enough money to run with.
Patience.
And then just patience, that's all. When that FTM you guys usually see, I say Madam's FTM. When I initiated that trade for her, it was during a major dip. So I initiated, there's a lady that also did the same, but she's not in this class today. Miss, I think her name is Miss something, but even though she bought hers after me. A trade like this now, I can leave it for 2 years in futures. I can leave it till Phantom gets
I remember my question now.
That means it's source case now. Someone trading future now. That means you can, since a link is still in the buying, this is the buying time for link as it's still low. That means someone can put it like FTM for futures.
Well, link is a slow mover. Are you sure if you are holding it, you will not cry like Mr. John? John has changed though. John is no longer, now he can hold something for longer. Does not used to worry like before. Because he started trading futures actually. That's one of the good things about trading futures.
This one, John no longer trades sports now, only futures.
When you're trading futures, it gives you like, that it satisfies that urge of I want to trade.
Mm-hmm.
So you don't have to touch your holdings. If you're holding something, you just let it run while you do your daily trading with futures. That's actually a very good way to trade. Less risk. Okay, allocate. Okay, say, I don't know, it depends on your pocket. Say $50 every week for futures. $50, if you trade it and it finishes on Monday, you won't trade till the next Monday. Or $20, I don't know, depending on your portfolio. If it finishes on Tuesday, if you get liquidated on Tuesday and you don't have any money, discipline yourself. No trading until it comes to the next week when you allocate another one. Then inside a week, when you make profit, let's say your $50, you're able to turn it to $120. You take maybe $50 and go and buy Texas or Coty, those ones that are still inside a hole for now. Why I usually say it is, Texas won't dig ground, enter inside, or Coty won't dig ground, enter inside.
Go
You
where?
understand? It has gotten to a very low price that where again is it going to? Is it going to zero? So those coins are where you just invest now. It won't even take long. Coty will come and dust. You see, Coty will do like 300%. You've seen it do before now. So you guys knew when it ran the first time. So all those ones that you see that they are not dumping downwards, but they are already at the bottom and trading sideways. You don't just see them and just ignore them because they are down. They'll peak. When they peak, you saw what Ruin did yesterday. Ruin has been down for a while. Then when it peaked, you saw how many percent it covered within, I think, a space of 8 hours. So think wisely and trade wisely.
I have a question.
Okay, man.
So when you said that you can hold a coin for long in future, how do you do that? Then what happens to the liquidation price? If the coin goes down or the price goes down, what happens? Are you able to get liquidated while holding it?
But you just said if.
Can I answer the question for
Answer, Mr. John. You know you are a pro now in futures.
For example, I'm actually even thinking
Holding what? I can't hear you. Cardano, okay. Okay.
I will be doing that. I must set my leverage to the minimal level that can give me a liquidation below a very, very strong support of both coins. So even if the worst comes,
Please explain that last sentence you just made. You said your liquidation above what or what, below what?
okay, let me come again. I'm mentioning Cardano now. Cardano now is 2.1, trading around 2.17. And like Boss said, for long now, Cardano has built a very strong support around $2. So no matter how red the market is, Cardano hardly goes below $2. Even when it goes below $2 to 1.9, it's quickly steps up to $2 back. So now if I want to hold Cardano on futures, right, I enter futures, I buy Cardano with a leverage that I know it will give me a liquidation price around 1.8 or 1.7 for Cardano, which I know it will hardly, I know that the value of Cardano will hardly get to that. That is even if it will. Did you get that?
Example of, I get that. Example of which kind of leverage are you talking about now? Give an example of the leverage. You say you can enter, how do you know you can enter a particular trade with a particular leverage and you get a particular liquidation price? Please explain that.
The higher the leverage, the closer your liquidation price will be. The higher the leverage, the closer. So definitely if I'm saying that I will enter a trade that will give me a liquidation price below a very strong support zone of that project, it means that I'll be entering the trade with leverage of 5x to 10x maximum.
Okay, Mr. John, let me just quickly help you answer Ms. Hannah's question.
Okay, sir.
It's just you knowing the leverage you use, just a simple calculation. So, for the example Mr. John is giving, let's say Cardano builds a very strong support around $2. So, and he's saying it will hardly get to $1.8. So, you yourself just calculate how much risk you are willing to take, because it's your choice though. You can decide to go for 5x leverage. Now, your entry point, you take that price for entering with 5x leverage. Now you are trying to say whatever you're putting in, it will have a 5 times multiple effect on your capital. So you just calculate. So that will be for 100% of your portfolio to be, that's your capital stake in a trade to be liquidated. I think Cardano has dropped by 20%. That's using 5x, because 5x times 25 times 20 is 100. The same thing with 10. 10 times 10 will give you 100. So you take your entry price and you calculate based on your leverage. What I mean is that, for example, let's say you're entering at that $2. Okay, I'm going to calculate if I want to run for 10x, means Cardano has to drop below my entry price by 10%. That's 10x multiple effect times 10% drop will cause a liquidation. That's from $2. 10% of $2 will be $0.2. So that will be exactly $1.8 I will get liquidated. So I know that it will be hard for Cardano to drop below $1. Okay, why not I go for 5x? So that at 5x, that means Cardano has to drop by 20% for me to get liquidated. And 20% drop of $2 will be $0.4. That's $1.6. So at $1.6, the entry, my whatever entry I'm having at $2, at $1.6, I will get liquidated. I don't know if you understand. So just for you to calculate that percentage drop in respect to the leverage you are entering with. So if you're using 10x, calculate 10% drop. If you are using 5x, calculate 20% drop. So the lower your leverage, the better it is for you. So that's just it. I don't know if you understand me.
Okay, I get it. Thank you so much, Mr. Daniel. Thank you, Mr. John.
After that, according to my own strategy of holding coin, holding any coin on features for long, I only do that when there is.
Who is speaking, Mr. John?
Extremely clear.
He's the boss.
So
Okay.
when
Oh, not that one.
so I will enter with 2x leverage. I know if I'm liquidated with that 2x, that means the market is totally crashing. So it is weird. I've hold coin for like is it up to like 3 months on features. So that's how I hold my own coin for features. When the fear is extreme, so I will put my coin there and I'll put on 3x and I'll just forget about it. So when this sets in, that I will have been in profit. So the kind of profit, so I will not have to.
Wow, that's a very good strategy. Thank you so much, sir.
Welcome.
Actually, features was not meant for you to trade 50x or 20x or all that shit. you go to Poloniex, you won't even see all these 50x we are trading or 20x. You won't. Because those ones, they force you to, get discipline. Unlike Binance, which people say Binance are very, very, very careless and reckless. Because normally you shouldn't be allowing somebody to trade a leverage of 125x. Is it not madness? Ordinarily, people like institutions, banks, other financial institutions, governments, they trade futures, as in they have the department that maybe in their finance department that trade futures for them. Like this El Salvador, we heard about a few weeks or a few months ago. They might be trading futures, you don't know, but you don't expect them to be doing 5x. They're not hungry. How would they be doing 50x or 100? We do it because we are hungry. We want more money. We are greedy. Not really you're supposed to trade. In fact, when you look at if you look at Binance, you see most of the coins they have this 3x or 5x or something written next to them. Those are just like the advised leverage to trade them with. It's just our greed that's putting us down. If you trade coin with 3x, why would you get liquidated? That means if you get liquidated, it means two things. Is either maybe the market is crashing, or you just woke up, you didn't even look at your charts, you didn't even do any analysis, you just jumped in, without anything. You're just gambling. Even at that, before you get liquidated with 5x, the price must have really gone so bad. It have gone so bad. You understand? So if your thing does the right way, you are not even really going to be stressing too much. Now, I've been on Texas for about over 4 days now, or 5 days at loss. But I'm not shivering because I know that it will push up. And looking at the formation, it's already looking like it's just waiting for volume to come in. I feel people's eyes are not yet in the market, are not yet focused on it for now. But I know that with time, just maybe a few more days, when people come to see that this thing has been crawling on the support, they'll start even buying. Let me buy small. But once volume starts increasing, it means that people are beginning to get interested and they're putting their money. FOMO will just set in, then boom, everything becomes green again. So I'm going to open that XTZ. I still have an old chart I've been working with. Sorry.
Before you open the chart, let me ask this last question.
Okay.
Now, if you are holding a coin, like as you said, the leverage is advisable to be like maybe very small, 2x, like Mr. Ridwan said. Is it going to be on isolated or on cross margin? Which one is advised when you are holding for a long period of time?
Cross is good. Cross is good. Cross.
Okay.
I want to speak on what Mrs. Nana just said, and I would like to know if I'm wrong. It's a kind of question also. If I want to use 3x leverage on a trade that I want to hold for long, I think for my liquidation price to be far down with to my entry price, I think it determine the capital, because using $10 with 3x leverage to hold a trade for a long time, the liquidity price will be more higher than the trade of $100 on isolated margin. So I don't think anybody get me.
I don't think I get you.
Mr. Philip, you want to confuse us the more.
You have to rephrase the question again.
Yes, I want to raise the question that using leverage, which is supposed to determine the liquidity price to be far above what's
far above or far below.
Depending on which side you're going, it could be far above.
When longing Cardano at $2 using 3x leverage, so for the liquidity price to be around 1.5 or 1.3 or $1, I think it determines the capital, the margin capital in isolated margin. I think it determines, because using $10 on that kind of trade, the liquidity price may not be a little too much below the entry price. But the higher the capital, the lower the liquidity price. I think so. Abi?
In isolated?
On isolated, yes.
Oh.
When your margin is large, your liquidation price is a little far. When you're doing a small margin, your liquidation price is not just far away from you.
Irrespective of the leverage.
I'm getting confused now.
Don't be confused, man.
It doesn't mean that. Okay, the confusion now is like what Mr. Philip just said. So I want to hold a particular coin for a long time. Then, for example, if I want my liquidity to be far away, I'm going to use maybe $100. So it will push the liquidity far away. Then, somebody that uses $10, the liquidity will still be maybe close to you, not as far as. Is that what he's trying to say?
I think what he's trying to say is that both the market.
I think that's what he's trying to say.
That's what he's trying to say now. So if my money is big, my liquidity is far away. If my money is small, my liquidity is close to me.
Exactly.
Is that what? Yeah.
Yes, please. I want to say something here. Sorry.
Okay.
When you are using low leverage, the little your margin, the little your capital on the trade, the closer your liquidity price, the higher your capital is the smaller your liquidity price. So imagine you open the Cardano $2. So when you use $10, your liquidity will be closer to that $2. Maybe it will be around $190, for example. But someone that used $100 to open that trade, the liquidity price of that person will be lower than you that use $10. So the higher the capital, the lower the liquidity price, and same leverage. So that is it.
Wow. Okay, now if I get you,
I'm talking about
isolated. Okay.
Yes.
What about if you are using cross margin? Whatever.
Cross margin is also is based on your capital also. It's just I did. So when you enter a trade with $5 on you want to open Cardano. You open you long Cardano at $2. So if you have $100 in your remaining balance on cross margin, maybe you have $105 on your Future account, you long Cardano at $2 with $5 using 5x leverage. You and the person that long Cardano with $100. So you people this thing the liquidity price will be at the same thing, or the person that use cross margin will be even lower than you that use isolated margin, because you use $5, the remaining $100 back up with the leverage, back up with the liquidity price. So that means the $100 is just like a collateral, whereby you cannot, if you deduct from that remaining $100 in your collateral, that's when your liquidity price will lift up more. But maybe both should explain this thing very very well.
Honestly, because Mr. Philip, you just thrown in confusion in my head. I'm confused now.
That Daniel has explained to you.
Mr. Daniel, please explain to us. Mr. Ridwan.
I don't confuse. Seriously, I'm also confused. I don't even know what to explain again.
Oh, you're talking now. Sorry. Oh, yeah, keep up now.
Mr. Daniel, please take the floor. Every other person mute.
Okay, well, there you
My network was actually I don't really know what I'm explaining, but Ashano is talking about high margin, low margin, high leverage. Please, someone should please enlighten me about.
Someone should do what?
Noise is coming from.
Enlighten me about what.
Okay, Mr. Philip was saying, Mrs. Nana was asking if she wants to hold a coin on futures for a long period of time. What does she do to avoid being liquidated along the line? So, Mr. Philip is saying if you are using a lower margin to trade, like you want to go for a long time, let's say like $10 to $20, and with a low leverage as 3x or so, let's say, and he gave an instance with Cardano. Let's say Cardano is at $2 currently, and you are using $10 to long Cardano, and you plan to hold for a while on futures. So your liquidation price with your low leverage, maybe it's somewhere around 1.6, 1.5. But if you go in with more margin, like $100, with same low leverage, your liquidation may be very far away. They're about maybe 1.3, 1.2 against the $10 that is just 1.6 or 1.7 away. I don't know if what you said, that's what you meant, Mr. Philip.
Yes, that's what I meant. Yes.
Good.
Okay. Well,
that is on isolated margin.
That is an isolated margin. I forgot to add that.
Okay. Sincerely, I understand what he's trying to say. I have a friend that is getting too. He has actually, said this to me before, that when he's using a larger amount to trade, he discovers that his liquidation is actually further away from his entry price.
I think that's what Mr. Philip means.
So I don't really, I've not experienced it though myself. But I think probably it's been done by Binance themselves. I think they have a way of trying to minimize. Should I say minimize your loss now? Because there are sometimes you see you want to use some certain amount of leverage to trade, but they won't allow you based on what is your account balance on your futures wallet. I wish boss is here. Probably he will be in a better place to answer this. Mr. Ridwan,
Hello.
do you?
Hello. Okay. Okay. Go ahead, Mr. Ridwan.
What Mr. Philip is saying only applicable to cross margin. In cross margin, if Mr. Daniel open a position, Mr. Daniel is having $200 in his futures account, and he opens a position of let's say $5, and Mr. Anthony is also having $200 in his futures account. Okay, let's say $100 in the futures account, and he opens a position of $20. Mr. Daniel liquidation will be far away from Mr. Anthony, because Mr. Daniel have enough funds to sustain the trade, because cross they take remove from your balance as the trade goes against you. So I think that's the only thing. It doesn't applicable to isolated, because you will be discriminated on what open risk. So mainly affected by the fraud. Thank you.
Okay, about the margin, cross margin and isolated margin. Just like I explained, I've explained it earlier, but you guys didn't correlate it with what I explained earlier. If you're on isolated with $10, you are signing a contract that the price must not drop to a particular price. If not, you're losing your $10, right? Now, when your collateral is more, if you're using $100, your collateral is more. Of course, they will not give you the same liquidation price as someone who is risking $10. You're risking $100. It will be 10 times liquidation price of $10. That's just basic.
Sir, on isolated.
Yes, on isolated.
Yes, it applies to both isolated and margin.
It's not the same as cross. The cross, when you are in cross, when you're trading cross, if your liquidation price is $5, and then you are almost approaching $5, price is dropping, you're already at 5.6. You're very close to liquidation. If you go to your spot and pack USDT and move it instantly to your futures wallet, instantly your liquidation, which was at 5, will move to like 2 or 1 or 3. It's not the same as when you're doing isolated. Isolated, you're signing the contract with a bulk amount. Boom, $10 is what I'm signing this contract with. Now I'll give you the liquidation. Since you're signing with $10, your liquidation is at 3. Once the price gets to 3, we'll take the money. But still, even inside the isolated margin, you can still add to your margin inside a trade to extend your liquidation price. Do you know that?
Yes, I know that.
Mm-hmm. So now you are entering, you are more like editing the terms of the contract. You are adding more risk to your contract, because if it hits the liquidation price, if you've added extra $10 on top of the initial 10, making it 20, you are liable for the entire $20 because they will liquidate all the $20. So if you add your margin when you're already in a position, you are editing the contract. Thereby, you are also extending where your liquidation price is. At the same time, you are getting more risk because whatever you add to the margin will bear equal risk as the initial one you opened. First margin you used to open the trade. So if you add to your margin again to extend your liquidation price, you're also taking extra risk. So it's as simple as that.
So in that case, that means the cross margin is even better than the isolated.
The cross margin is not any better than the isolated because in the cross margin you are in a position. You guys are just new. That's why you are still jumpy about futures. Sometimes a time will come. I'm not putting anything back, but these are things that you definitely experience one way or the other. A time will come where you are in very good trade and you're green, and then you set your stop loss at first, and then it's still far from your stop loss. You're still printing more. You think you're taking profit. Maybe you've taken small profit. You think you're after all, before they even go back to zero. I will run. And then something happens. Maybe your phone hits the floor while you've not set your stop loss and your screen smashes. And you can't quickly open BENN.e on another phone without, getting all the message and maybe authentication and all that. And you are still in a position. You were green. You even gain some profit. Only before the next morning when you run to the phone village or something to go and change, they have liquidated probably up to $200 you had in the wallet. I showed you guys someone who got liquidated 15 million naira night as crossed. That will not happen isolated, because isolated you're cutting out how much you're gambling with, and it can never go beyond that which you isolated. In cross, you are joining everything on your futures wallet. You are trading with everything. The collateral is the remaining balance in your futures wallet. If you have $1,000 in your futures wallet and you put a trade with $50, 50x, if you're trading Shiba, for instance, and the current price of Shiba is 33.00033. If you're trading cross $50, 50x, and you have a total of $1,000 in your futures wallet, if those should drop from 33, I think about 3.1 or 3.1 something, the $1,000 will melt instantly. Everything is only a message that they will leave for you. So I use it and console yourself. So it's not any better. If you are not a pro, you shouldn't be trading cross. Isolate whatever you are able to lose, what you are comfortable with. If you can lose $50 and sleep normal, having a happy, isolate 50 and if you can lose 20, isolate it and trade with it. Cross can be very deadly.
Yes, thank you very much, sir. Yeah, cross is very, very risky. There is a lot of high risk on cross. So if I'm using isolate, I do recommend using low leverage. low leverage. So because the higher the leverage, the closer the liquidity price, the liquidity rate. Yes. So like I suggest that those who use isolated margin should be trading around maximum 10x leverage rather than using 20x or more. So that's what happened to me when I just joined this class earlier. The boss placed a trade, which I saw the liquidity price was very far above. It short a market. Liquidity price was very far above with 50x. I used isolated margin. I didn't know that he used cross margin. I used isolated margin. I used 20x, and I got the. I was like, what happened? So why did I got liquidated and you that used 50x USD on the trade, and the trade already bounced back from loss to your profits? So that's when I just understand that you use cross margin. So using an isolated margin with high leverage is very, very risky. Also,
level of this class where we've gotten to now, nobody's meant to be trading above 10x on isolated.
Isolated.
Yes, that's the maximum for isolated. To trading, unless you have a big bag. I don't have a big bag, but I know what I'm doing. If you have a big bag, if you have $5,000 in your futures and you are trading with $20, you hardly get liquidated. So far, you are doing your technical well, and you're placing your trades well.
I still get the class, but let me just send it here.
$5,000 in your futures well, and you're just not greedy. You're maintaining a very stable margin of maybe 20x. You hardly get liquidated unless there's a major crash in the market. So trading, because you're supposed to have a big bag, so that even though the trade is going bad and you know what you're doing, you can cheat up, pull out, or to at least pull out yourself from the loss. You can reset your price and carry on. So that's the truth. Nobody here is voice. If I'm still looking, nobody is qualified to trade above 10x. Your technicals are getting good by the day. We are already at the end of this class. So more knowledge can only get to those who are in the silver class. But the silver class is not about features. We have our own curriculum. But those things we are teaching are things that will also fortify you to face the futures markets.
So basically now in isolated, the truth of the matter is that your liquidator price is determined by your leverage. Your margin has nothing to do with your liquidation price. I think I just explained.
Your margin has something to do with your liquidation price, just like I explained. If you're staking more, your liquidation price is extended. If you're staking less, of course, liquidation price will come very close.
But boss, I just when the argument started or when the confusion started, I entered. I don't know if I can share my screen. I entered Cardano at 2.146 with $5, and I shorted the liquidation price, and I entered and I showed up around 2.148. Then I re-entered again at the same entry. I entered first time with $20 now, and the liquidation price is the same thing.
Do you have a screenshot of it? Let's see.
I'll send that to the group.
Just send it to the group, please.
Your price will be the same to the you are buying back at your
entry price.
And if you want to buy back, that means you buy higher. So that's when you're
I have to say something, sir. I have to check something. If you long at, for example, $2, and are very confident on isolated level and isolated margin, so you are very confident on Cardano that it will go higher than what you expect. So long it at $2, and it went, and you look with $10 at $2. So and it went down 1.9. So maybe your liquidity price was around 1.5 or 1.6 using 3x leverage. If you went down 0.9, that is, you are already on loss. So you can, if you open another trade, if you open another position with that same 3x leverage, another $10, that adding it to make it $20. If it didn't went down from that 1.9, your entry price, the new one just opened, will be added to the previous one, and it will cut down the entry price to 1.9.
But excuse me, Mr. John, what you're saying, the definition price is different. It's different, a little different. The other small time for you.
I was wondering how it's possible for you to enter two different trades with different prices and get the same liquidation. I don't think that's. Let me even look at it closely. Okay, you see, it's adjusted. It's not exactly the same, but let me see your entries if they are exactly the same.
It's not the same. I think what is causing the difference in the liquidation is the marginal difference in the entry. The first entry was 2.14650, and the second one is 2.14600. In fact, I made that slight mistake because I didn't see the last two digits, because I wanted to experiment the confusion, like to just know. I point the right time that some of these things we have understood when we practice our hands on this thing.
So now you entered with $4, the liquidation price is 1.94437, and this one 1.944. It's almost the same thing, and the entry price is not exactly the same.
Marginal difference. So I want to believe if the entry prices are exactly the same and the leverage to the same.
Exactly the same.
Let's be the same. I want to believe.
You have to research this to be very sure, though. For you guys that do isolated.
Mr. John, you've created more confusion.
No.
Yes, no.
It's something we need to look into so that we'll be sure. But how come the market price? Okay, and these two trades are running concurrently?
No. The first one
and finished.
Has been closed. Yes, I closed the first.
Now open the second one. Oh. I'll look into the
1.148. Yes, I'm right. Then when the price again dropped a bit to 2.146 and I open, we can just experiment this thing anyway. If this is still bringing confusion, I will do some experiment and I'll send it.
We'll need to experiment it just to.
Because with what you just posted now, it's like even with your margin, it doesn't matter as long as you enter at the same or close to the same entry price, your liquidation is still the same thing. That's what you just.
From what he posted now, it seems like those things don't now matter.
No, it's not those things. It's just the margin that doesn't matter. What matters is the leverage.
No, what you are trying to no. Both leverages are the same thing. You entered with it. Now the margin is the one that is different. You entered close to the same entry price.
Yes.
But the liquidation are almost the same as well.
Yeah. So, now
so in that case, in that case, that means it doesn't matter the amount of money you put. If I enter the same price as you, the same entry with you, that means the liquidation will be the same thing. That's what you are trying to say.
That's my research. Research.
Okay, we'll research it all together.
What I'm concluding on is that once you have the same entry, with the same level, you get the same liquidation. Your margin is not a factor considered in calculating the liquidation price.
I think let everybody at least go and research on this so that the next time we meet, you can know, or at least I will generalize our findings to ascertain what is and what is.
The only way we can find out is for us all to agree on a particular price, a particular entry, that each and every one of us is going to put a particular amount of money. Then at the end of the day, we will now know, right? Yes, different amount, yes. But we agree on a particular entry. We'll set our entry at that particular point together. That's the only way we can find out and see what happens at the end of the day. Whether all our liquidation price are going to be the same thing.
Okay, let's assign 2 or 3 people to enter Cardano at 2.146. This is my second entry.
Have you done your analysis, boss? Yes, now you are suggesting you should come up with something you are sure.
That's a very good question. Have you done your analysis, Mr. John?
Let's do experiment with good analysis.
Can't you afford to lose $1?
Oh God, come! All of us are not entering with $1 now. Some enter with 5, 10 to check the difference.
I didn't hear you.
I said we are not all entering with $1. We are entering with different margin. We want to see that's the experiment.
It will not be, it will not be different. Like that's different. One can enter with $1, another person $2, another person $3. We are not going high actually. You can just use 3 people.
In your Nigerian naira is up to. Anyways, you can try it out.
And Cardano is a split project. It's not a shit coin, so it can't dump your money.
This guy, you don't understand.
Don't be too confident.
You don't know. Play with grace.
But do you know that this is what all these whites do, and they get to know more things. They compare. I mean, they do research. They learn.
Yeah, that's true.
To learn something from the show of something. Not a big deal. I did that even without telling anybody, just to know the real truth behind it. So you can even
That's
try.
A good one. It's a good one. This is how you learn things. You make researches on your own, and find out things. Know what is and what is not.
Exactly. Not like us that we are scared of entering a trade.
Wait, so it's like I traded green at short position, short at 11.3, margin 2.7, leverage 50x, liquidation price 41.20, cross margin. Market go higher. I don't understand.
This one is complicated.
So I'm confused myself.
Yes, what I'm saying is that I short this market. So and I short it at level 0.20. Please, can you understand?
We are hearing you, sir.
I short room at level 0.20. So when I short it was going against me to 11.40. which is already at loss on me. Please, am I communicating?
No, sir. Can you come again?
Okay. This morning, I placed a trade on Rune at to short, that is sell short.
Yes, we
at
understand.
11.30. I used $2.7. My average was 50x, and immediately the market, the trade triggered. My liquidity price was at 41.2 when I used cross margin.
Okay.
The market was going higher against me. The market was going higher against me, and I saw it at 11.40, which is already at loss. I set another entry to short again at 11.60. So I used same leverage of 50x, but at this time I used $2.4. So while the previous one already counting loss on me already. So when this real price hits my 11.6, when I open a short trade, please understand, I open a short trade.
We're understanding you, boss.
Yes, it hit 11.6. My first position was 11.3. This second one hit 11.6. So I immediately hit the 11.6. The entry price jumped from 11. The previous entry price moved from 11.3 to 11.48. So my liquidity price dropped from that $41.2 to $23 with same cross margin.
Wow, Mr. Philip, you have brought another one again.
And I shot it at 11.3. I shot it at 11.3. And it was already big. And I don't have any loss or anything. I was very confident that the market will be dropping. So I opened that trade to reduce my entry price. So I'm already risking my to risk of the liquidity price. The liquidity price will become closer than before. But my entry price will now change from the previous one to another level, which will come closer. I go back. Once market now dropped immediately the market was dropping back from that. When it reached 11.48, I was at 00p profit and loss. I was not counting any profit or loss. So when it dropped down to 11.4, I was counting some cent profit. So it was not affected. The previous 11.3 was cancelled, and the recent 11.6 was not calculated. Everything was added up together, and
So how come you're not liquidated? I wouldn't get it.
I was. Oh my God.
Okay, Mr.
Were you
Philip.
liquidated? How come the liquidity price is not changing as you keep your trigger point? I don't understand.
So now I said when the market was going against me, I shot this trade. When it was moving higher, going against me, I was confident on the market, so I shot it again at a higher price. On that level now, it will not open another position different when I'm using the same leverage and the same leverage.
Okay, so you open like 2 or 3 different positions in one trade.
In one, yes, on one trade. That's the leverage.
With the same leverage.
Yes.
Okay.
So when
Bob answered this question earlier on now, if that's what you're saying, because he said if you open a trade like that, you can correct your price by opening another trade if the market is going against you. So they will take the averages of both trades as you put it, then they'll give you a liquidity.
Exactly.
By using the average of the both margin. That's what he said.
I even have my calculator. I just hit what he said now and I got what he just wrote down. So it's just the division and whatever inside. It's just the average of your positions that just add up to everything that you got.
So, like, okay, for example, what I'm trying to say now is that if you want to put yourself on trade, if you don't want to, if a trade is going against you and you don't want to close it and reopen again, if you want to risk yourself more and to reduce your entry price, you can still open another position of same leverage and same trade pattern, like shorting a trade. If it is going higher again, the liquidity price will get closer than before.
Okay, enough. Let's face something else. We are getting more confused and
I think we understand, but let's continue.
You understand this? Because I'm trying to comprehend what it is about.
Because I asked a question earlier and you were about to answer it, but somebody again chipped in another thing.
Okay, what was that?
I actually mentioned like 3 coins you should help us analyze, but since the time is gone, I just prefer you analyze Tether. Just one, just Tether. It's just Tether alone. We just
It's like
no, not actually.
John is never asking for coin to enter for analysis, but the one you entered, what would that change if you analyze a coin you already entered? Will you now go and sell the coin you're supposed to hold?
No, I just want to see clearly, confirm the support and resistance.
They say you should hold, Mr. John, hold, please. Hold Theta, please.
Hold on for dear life.
Okay, let me see if I think I have good chats on Theta. I'll leave you guys soon.
Excuse, sir.
Yes, sir.
So, John, what do you want to see? This is Theta.
Okay, I'm seeing this. Where do you have major support?
Okay, I'll see you guys tomorrow. For the people who are in the silver class, will resume our activity. For the bronze class, activities will resume maybe from tomorrow or next tomorrow. As for me,
You pinned a message earlier about gem research, and I asked you, said you explain this.
Okay. I said I am looking at we're going to start building up teams. I've said this before. We're going to have a team of technical analysts, a team of fundamental analysts, and then very soon, but that will be a little later than now. After we must have, had our financialists. We still have a team of financialists, people who manage money, on how to trade, people who teach you how to use the money you have inside a trade. By then, all this, you buy $20 and all that, you will learn, if you're in that team now, you will learn how to manage funds during a trade. You're placing a trade, you have $20 total. How are you supposed to trade with it? so that you can protect the capital and maximize profits. How do you now allocate your funds to your trades? When you've made profits, what next? When you are losing, what next? There are a whole lot of things. That's a whole different department on its own. So that will come in much later when we must have all been grounded on technical analysis and fundamental analysis. So the team for the fundamental analysis will start up by gathering those who are very good with making researches on finding out all these new gems and all that. Then they will be assigned to a fundamental consultant who will now grind them on how to use on-chain metrics and then fundamental analysis proper. Then they will build their own team and provide services to we the technical analysts. And they will work as a whole team to make profits. Everybody will work. So I will start picking up, gathering the people who will be. That team must not exceed. I'm not looking at more than 5 to 7 people at most. So the slots are few. So you must be really dedicated to make that team. My technical analysis team, I'll soon shortlist, will not exceed 5. And then we'll have ad hoc 2 extra who are working with us, but not fully stamped, not fully commissioned as analysts. Probably the best 2 upcoming will be with us on the sideline. At the end of all this whole program, certificates will be issued though. Yes, certificates will be issued. Anyway, this is a topic for another day. So guys, good night.
Mr. Anthony, please, before we go, can you hear me, Mr. Anthony?
Sorry, what did you say? I can hear you.
There was a time we were taught on how to use pancake swap, farms, and the pools. Please, do we have the class recorded?
Yeah, I think yes, we should have it recorded. We should have it.
Okay. Can I have the link, please?
Okay, I don't know if it was uploaded, but I will check and upload this night.
All right. Thank you very much.
Welcome, ma'am.
Thank you, Mr. Anthony. I would like to have it also.
Okay, boss.
Mr. Anthony, the classes we had on Ichimoku and Magdi, these were they recorded?
Which day was that? Sorry.
Ichimoku.
All of you asking for recorded classes. All of you asking for recorded classes. Do you know how much data this man uses to record and to upload these things?
May God bless him for us.
So you will bless him, and then God will now bless you and bless him.
May God bless him. God will bless him abundantly.
Took his tithe and offering.
I think we are going to make a contribution for Mr. Anthony. Yes. No matter which class you belong to, no matter how little, a contribution must be made. And we'll keep this on because this man has been uploading, recording, downloading, and all that. And you guys will intentionally skip class to come and collect the videos.
But some of us didn't intentionally skip class. So.
But many people, including especially you.
It's not intentionally, sir.
So a contribution will be made for Mr. Anthony to keep up the good work. I have been just over busy these days. I am supposed to have created our own YouTube account where these videos will be stored forever. And we'll keep piling them up and keep getting more views and all that. But let's just take a step at a time. The workload is just becoming too much. We might need another admin who will work with Anthony and Priscilla as our media managers.
Okay, sir.
So
Can you give
tomorrow,
a minimum maybe 50 cents? 20?
the minimum contribution we are going to make to Mr. Anthony will be $5 is okay. The minimum. I don't want to see anybody contributing $5. I mean, let's just say you've not been doing well of late and you just have to try. At least $5.
Are we
He's supposed to be appreciated, not just appreciated. At least he's been.
What's the minimum now?
$5 should be the minimum anybody will contribute.
Okay.
Because he will keep uploading these things for God knows how long. I know how many videos he has uploaded, and you guys will just go and download. It takes more data to upload and download. I hope you know. It takes more.
That's true.
That's why it's a lot slower when uploading. So please, we are going to do that tomorrow. Everybody will at least show some love so that he can keep up with this good work. At least with these videos, I know it has helped a lot of people. We know that our works can be tasking that we may not be able to meet up with class. And I can't repeat myself. This class is so exhausting. I'm so tired right now that once I leave here, I'll just lie down and sleep. And I know that's how most of you feel. So sometimes if you miss class and you have a way or a place to get a record, and it helps a lot. So let's appreciate and give him more grease to his elbow to push up.
Sir, the idea is welcome, and considering the fact that Mr. Anthony is my paddy, but the contribution, is he gonna be a weekly? That's why you contribute $50, Mr. John.
No, it's going to be a monthly. It's going to be a monthly contribution. Wow. And then for the admins, I'm not getting anything. They are the ones that will hustle their own pockets this time. Last time I asked them to hustle their pocket, everybody just relaxed. But if they are, my admins are big boys and big girls now. So if they are big boys, no wahala, we'll let it slide. Me that I'm the urchin. Maybe I'll just, hustle for them and put in my own pocket. Because the floor will be open next week for them. The admins should be appreciated. They're doing a whole lot of work. Way lot more than I do. So they should be appreciated. And then start applying, I need one more admin. Preferably a female. Because I need people to manage the media. A whole lot to be going down. I need someone who is very...
Mrs. Taiwo, you found that you're pushing it to me.
I'm actually a media person.
So.
We need someone who is very good with media. I hope you guys know that we are still in the process of branding Traders Up. And then we, it seems we got tired of inviting our friends